Over the last 4 months, we've had 4 occasions where the market has done the same thing and responded in the same way. Usually, if somebody pinches you with a needle, once you get hurt. The second time, you may be a little more reactive, but by the third time, you have been conditioned that if this happens, this is going to be my response. And so if you haven't been conditioned by the market in terms of how you should respond to news, then let me highlight it for you. Each of these moments, what happens is the market falls ahead of the event, ahead of the news in anticipation that something is coming. When it's actually announced, it ends up making a low, and then that bottom is not reached again. It reacts from there to the opposite side and starts going up, and we end up getting a bottom. This is the 4th time we are seeing something like this. So it started with tariffs. After that, it was Indo-Pak. After that, it was Israel-Iran. Remember, the day they attacked, the bottom was made, and then we rallied from there for the rest of several weeks. And then once again, we've not even gone back to those lows, but once again, we have gotten close enough on this expectation that maybe the India-US trade deal may not turn out as expected. Even if it does, the point is that there was an anticipation of news. A news flow has come in overnight that this is what we are going to do. But we are still negotiating because negotiations are still going on between the two, and Trump has also said that this morning it's a negotiation. And so the final outcome will only be known later, which means the final outcome could be better than what he's already said, and the market has already discounted the worst case scenario. So can it get worse? The answer is no. The reaction should be the same as on the last 3 occasions. When news comes, you go the other way. So this is the old adage, if you buy any investment book dating back 15-20 years, you'd find an adage saying, buy an expectation, sell on news. This is the oldest adage for investors, but that was used to be related to earnings, because at that time we used to mostly follow corporate earnings or economic expectations, and then the market would go up in expectation of that, and there would be some profit booking on earnings day. We do still see some of that today, but a lot more we see is the opposite, because thanks to social media, bad news transmits much faster than good news, and therefore every time the market tends to react in anticipation of bad news and then rebounds once the news is out in the open. The exact opposite of what used to happen before. It's the same theorem. The only thing you need to be conditioned to it, that we were anticipatory and this is the outcome and this is what is going to happen. So in this scenario, markets fell for the entire month. The bad news is out. You're bottoming. The follow-up is going to be something better than what's already happened, and therefore things can only get better. Might be the last opportunity to buy into the second highest short position that FIs have held on Indian index futures, because maybe they were anticipating this and they hedged themselves in the history of index futures data since 2012. So this is the second highest short. Any positive trigger from here can lead to a major short covering rally. I won't be surprised that you end up at all-time highs in a couple of months if that happens. But for the time being, the bottom has been made.